Markets today are being shaped by a powerful mix of long term structural shifts and short term economic pressures, forcing investors to rethink where resilience and opportunity truly lie. From the global push towards electrification and infrastructure renewal to evolving dynamics in commodities, consumer behavior, and emerging technologies, the investment landscape is anything but straightforward. At the same time, traditional signals are becoming less reliable. Assets that once behaved predictably in times of uncertainty are diverging from historical patterns, while new areas of growth, particularly in artificial intelligence, are rapidly maturing and finding their place in the broader economy. To help us make sense of this, we're now joined by Brendan Caldwell, Director of Caldwell Securities Limited. Brendan, thank you so much for the time today.
Great to be here, Theresa.
Now, copper has been one of the market's clearest expressions of the long-term electrification and infrastructure build-out theme. In your view, is this still the long-term investment case for copper?
Well, copper is as a metric, a bellwether, an indicator of the health of the global economy. It has the moniker Dr. Copper as a being able to assess the health of the economy by how strong the demand for copper is. But with any commodity that goes through cycles of boom and bust, it tends to actually exaggerate in both directions. So when things are going well, people buy too much, and when things start to slow down, people buy too little. So it tends to exaggerate in both directions. I think the added, well, how does one say, not confusion, not pressure, dynamic of artificial intelligence has led people to believe there's going to be mass electrification, there's going to be so much more, and then things like last year's deep seek announcement out of China, well, maybe there will be a lot less, maybe we don't need quite as much. So yes, there's been a lot that has affected the price of copper beyond the normal health of the economy. I think what we've seen, though, is that certainly the US economy remains robust. I think there will be continued spending on electrification. I don't think that the current fairly low price of copper is going to be an indicator of an economic slowdown anytime soon. So it is still a reasonable indicator of the health of the economy, but like any indicators, particularly economic indicators, it tends to overshoot in both directions.
And I want to switch gears now to gold because you and I have had a few conversations about this, but why isn't gold acting like a classic safe haven right now?
Well, actually, gold is acting very much as gold acts, in that it's not so much a safe haven as a hedge against inflation. And if we see a scenario where interest rates are going up and the U.S. Federal Reserve is going to try and clamp down on inflation, um, gold is actually acting very reasonably. And keeping in mind, it's gone all the way from maybe a couple $1,000s an ounce to $5,500 an ounce. So $1,000 pullback from 5,500 to say 4,500 in the price of gold seems like a big number, but considering where it's come from in a relatively short period of time, that's just a market correction. But in terms of as an indicator, it you go back to the financial crisis. It wasn't gold that did really well in 2008 when everything was going to, and this is the technical term, hell in a handcart. It was actually the U.S. dollar was very strong. Up until then, the Canadian dollar, the loonie, had been very strong, and not long after the financial crisis, the loonie was very strong. But in the middle, the dollar was king, and that's what we're seeing right now. If this Iran conflict, so-called war, continues, and the price of oil continues to be strong, the U.S. Federal Reserve may be tempted, I think wrongheadedly, but it may be tempted to raise interest rates to tamp down on inflation caused by oil prices going up. But I don't think I'm talking beyond your question here, but I don't think it's necessarily a good move for the Federal Reserve to slow down the economy, which is already going to be slowed down by a higher energy price. I don't think it makes a lot of sense.
Now, I want to stay on the topic of the Iran conflict. So, with the Strait of Hormuz being closed right now, we're seeing fuel prices rising. Airlines are increasing fares. Is travel still a sign of resilient demand, or are we starting to see a limit of consumer spending?
Weirdly, you haven't seen, I mean, limited anything from my nephew's getting married in June. And it's not even an airline thing. I just want to rent an Airbnb in the greater Coldwater area. For those viewers outside the GCA, the greater Coldwater area, you probably don't even know where Coldwater is. But we wanted to rent an Airbnb for 2 nights, like $3,800. Now it would house a lot of people, but still, that's a lot. I think we're ending up staying in, I don't know, some accommodation in Aurelia. But long-winded way of saying it's not just travel by airline that's expensive. Everything to do with travel is expensive. I'm surprised a bit that the economy has been that resilient to high travel prices, and the price of premium fuel now is over $2 a liter. I don't know what the Americans are complaining about, $3 a gallon. Now it's U.S. Canadian gallons liters, but the Canadian dollar price of energy is still way higher than American. So whether you're driving, flying, or staying in an Airbnb, the prices have gone stratospheric, and I'm genuinely surprised that they're sustainable at those levels. So uh, like anything, the cure for high prices tends to be high prices. And I think there will be something for correction at some point. Otherwise, this economy is a lot stronger than I think it is.
Now, I want to switch gears to artificial intelligence. OpenAI recently
Hmm.
expanded sales of its AI tools to US government agencies. Do you see this as a sign that AI demand is becoming more durable and commercial?
Well, I think it's becoming more. I'm not sure what. Uh, in that the previous contractor to the Pentagon wouldn't Anthropic wouldn't actually give open access to the Pentagon and the U.S. Defense Department to monitor U.S. citizens and have completely free range. And so the Pentagon not only cut Anthropic off, but considered them I can't remember the exact term, but a high risk, and basically blacklisted them as though they was McCarthy era communism or um, some sort of foreign competitor coming out of Russia or China. So Anthropic, with Google and Microsoft and these companies coming to their side, are actually competing against that. So yeah, OpenAI is doing all these things for the Pentagon, but what they're all doing for the Pentagon is stuff that not even Anthropic was prepared to do. So I think it's a sign that the AI in general is becoming uh, perhaps the monitoring device that governments are using that many have feared.